What's up, YouTube? Welcome back to another video. I got a really good video for you guys here. We're going to be talking about liquidity. We're going to talk about liquidity concepts, following the money. That's what I'm going to talk about. How do I use liquidity? And basically just breaking down some of the setups that I took this week. I realized I haven't talked about liquidity in a while, so I know another video on liquidity. A lot of people talk about liquidity, but I'm gonna kind of keep it simple for you guys. It's not really that deep. Liquidity is very simple. You guys already know the basics. There's liquidity underneath every high, underneath every low, right? We've heard that thousands of times already on YouTube. So I'm not gonna go ahead and just sit here and give you guys that same old redundant information. This is a key part of my A setup. So I'm just kind of breaking that down to you guys. This is like the most important rule in my A setup is manipulation. If I don't see that in the setup, I don't see that in the market, there's no trade. Follow me on Instagram. I post videos on there too, informational videos there too. So also join the Discord too. It's a public Discord. It's free. For mentorship, if you want mentorship and you want me to break down all of my concepts and everything that I use to trade and, all these setups and how I actually trade, reach out to me, sign up for the mentorship, and you can get mentored by me and I will teach you how I trade. So you guys can see this is the trade that I'm in right now on USD CAD. I've been in this trade for a little bit. This trade almost stopped me out multiple times, like 3 times now. Been kind of playing around. You can see we have this high here, that high there, and that high there. That almost took me out multiple times. But thank you to my friends at JP Morgan. Shout out to you guys at JP Morgan for keeping me in this trade. They've been taking these sell orders with me. So I appreciate y'all at JP Morgan for that. Let's zoom into this area right here. So I want you guys to pay attention to this, and it's very important. Asian highs and Asian lows. Guys, I can't stress this enough. Asian highs and Asian lows. This is the indicator that I have right here, Asian session range. It's showing you this, not that gray area. This gray area right here, hopefully you guys can kind of see it. You see this gray area right here, that whole area. This is Asian session, right? So the indicator just tells me what Asian session, and basically all I'm looking for is a manipulation of Asian session highs or a manipulation of Asian session lows. After that, I have the breaking structure that I'm looking for. I have the imbalance that I'm looking for, and I'll make separate videos on those. But right now we're going to talk about that first thing, manipulation and liquidity. Okay, that's going to be the main thing that we talk about right now. Asian session will literally range, right? Will create lows and will create highs, right? Once London session opens up, depending on what the market structure is, what the directional bias is, market will raid Asian session lows and it'll go higher and we will mitigate that, right? That'll be our manipulation. That's what's called our manipulation because we manipulated the lows. We took out lows here. So we took out all these liquidity and we impulse to the upside, right? That's a simple setup there. That's a buying opportunity. And then for our selling opportunities, we're looking for Asian session to take out the highs. So let's say this is Asian session and then we have highs and then we have lows. We're looking for it to take out the highs, manipulate the highs, explode lower for a mitigation, and then the market impulsively moves to the downside, okay? That's a simple just buy and sell setup there. Now, to kind of get into this trade here that we took, you can kind of see this is exactly what happened. If you see the setup right here, understand this is a high probability setup, right? This is my A setup. We have Asian highs, and not even just Asian highs. We have all these highs. Look at this high, that high. We have that high, and all of this is building liquidity, right? We know that equal highs has been liquidity. You can see none of these highs took each other out. So we have high here, high there, okay? So boom, that's our liquidity. You see the market comes up and takes out that liquidity, right? We take out these highs here and look at the impulse to the downside after that, right? Look at this candle to the downside. We impulsively move to the downside. Breaking this low and even coming down to break this low later on, right? That is a clear sign of manipulation, guys. That is a clear sign of manipulation. That tells me that sellers got into the market here after we took out those highs. And just to add another extra roll into it, we filled imbalance too. I know you guys love the fair value gaps. I know everyone loves the fair value gaps, the imbalances. I do as well, right? They're very, very, very useful to my strategy. Once I see that, this area here that created that manipulation is my entry. So basically is the nature of this move is, let's say some type of bank or institution wanted to sell this market. They have to create liquidity by buying the market, right? They will buy the market to get into these prices, right? To get those prices so they can get their orders filled because they can't just throw money in the markets. They have too much money. They can't just throw money in the markets. They're not allowed to do that. It's illegal. Okay, so they're not allowed to just randomly throw money into the market. They'll literally crash the market. Okay, so they have to buy into these prices to get their orders filled, and then they'll put their sell orders, right? That's what you see, these impulsive movements moving to the downside. That's when those sell orders come in. So if we see that the market rated these highs, filled this imbalance, and we see this impulsive move to the downside, we know that there were sell orders here. That makes it a high probability area. That creates that supply zone for me. You guys know I trade supply and demand. That creates that supply zone for me, knowing that, hey, there were sellers here. When the market gets back here, I'm going to look for sales inside this area. That's what creates a supply zone. So you guys can see here, as I drag this lower, you can see the market has been respecting this area. And I mean, I'm still in this trade. I'm targeting on 1 to 3 here to the downside. Okay, so I'm expecting this market to continue lower. We've been rejecting off of this area multiple times. So that is the current trade that I'm in currently right now. People are saying, okay, yeah, the bank stopped me out or institution stopped me out. Institution's not looking for you. All right, bro. The institutions are not looking for you. Honestly, guys, I'm sorry to say it, but your money is too small for these institutions, right? These guys are trading millions and billions of dollars. Unless you're trading millions and billions of dollars into the market constantly, average, right? These banks are not looking for you, right? That's small money to them. They're looking for millions. They're looking for 1 million, 2 million, 3 million, 10 million. They're looking for actual money that can fill those orders because they're throwing millions of dollars to move this market and to get their positions. With that being said, they're not fighting against you. They're fighting against other institutions. Okay, so all this liquidity are probably from low-level banks or, other institutions that are just trying to short this market. And the big players, JP Morgan, all the big banks that have more money, right? It's basically big bank take little bank. I know you guys have heard of that before. It's big bank take little bank. That's how these markets move, right? It's purely money. Okay, so when we talk about liquidity, it's very important to kind of understand that. All right. So seeing all of these highs sitting here, I know that, hey, this is like a liquidity pool. That's why personally, I seen some of my mentees trying to take a trade from here. And I told them not to take a trade from this area because the market was generating liquidity. All right. So we didn't take any trades anywhere inside of here. My bias was still to take myself from right here because this area still has not been mitigated. We have this up move that takes out these highs, fills imbalance, and we get that impulsive move to the downside. When the market does something like that, okay, there is orders here that needs to be filled. All right. So when the market comes back into here and we get those orders filled, we will see more selling orders come in because these buying orders that was created to take out these highs and to fill this area needs to be mitigated. They don't always come back immediately to mitigate them. As you can see, this took a little bit before we actually came back, but now they're mitigated. You can see the market immediately is reacting off this area. That's no coincidence, guys. The market is immediately reacting off this area. Okay. Let's say you have a demand zone, right? This is going to be your demand zone here. And bear with me, guys, right? I'm not the best artist here, but let's say you have this demand zone here that's going to the upside, right? Let's say the market does this. This is a perfect setup. If you see something like this, just know you're about to make money, okay? Demand zone, right? Let's say this area demand zone, we have an impulse to the upside. Let's say the market slowly retraces and there's imbalance. There's a fair value gap. The market does not fill it and it just continues going higher. This right here, this is an A setup for me as well, right? This is an A plus setup, right? This gives me extra confluence because one, I have my demand zone that I want to take my trade off of. I have a fair value gap that's not filled, right? The market has not traded into the fair value gap. And we have created inducement. So what does that mean? That means the market has two objectives down here. The market can easily come and take out liquidity and we can come fill this fair value gap. Why do I want to see that? That gives the market a reason to come back into my demand zone. So when the market comes down here and we manipulate these lows and we fill this fair value gap, we're going to see an explosion because the objective has been met, right? Because we're taking liquidity, we're filling a fair value gap. Buy orders is coming into here, right? We're getting institutions placing buy orders because we're manipulating liquidity. They can get their orders filled, okay? When we take out liquidity, that's when institutions are getting their orders filled. USD-CHF right here is another trade that we're in. And I'm going to go to a fresh chart here to kind of break down this trade for you guys. Why did we get into USD-CHF? I want you guys to pay attention to this a little bit more. Look, we have this highs right here that's manipulated. So in this case right here, look what this market did. We manipulated these highs. Look at this candle. Look at this wick right there. That manipulation of liquidity. Boom. Right? You see that manipulation of liquidity? Look what happens when the market gets back into it. We mitigate it. There. That's going to be our supply zone. After that manipulation, look at that impulsive move to the downside, creating a fair value gap, a huge fair value gap. The market comes immediately back and fills the fair value gap, and we mitigate that manipulation that created that supply zone, right? That manipulation becomes our supply zone. We mitigate it, and immediately the market sells to the downside. Even we come back for a second time, we mitigate again, getting more selling orders, immediately push to the downside. Okay. These supply zones, these manipulations are no joke. And we take out all of these lows. Okay. Underneath this here is liquidity, guys. We use liquidity to identify our manipulations, and we also use liquidity as targets. Okay. All of these lows right here are generating liquidity. This is a pool of liquidity. Why? We have this low here to the downside, and look at all these lows. Look at all these wicks. When the market comes here, you have institutions, you have regular traders, just anyone that are buying from these areas, and they're buying, and stop losses are usually underneath the last low, which is right here. You can see this low, all of these wicks, all of this price action never went underneath this low. So for a regular person, a regular trader, or a bank or institution, a low-level bank or institution, they're buying this market. Okay, the market's creating an area of support, and we could bounce from here, especially after this big drop, right? Especially after this big drop, guys. Okay, what does the market do? They target that liquidity. Okay, they target that liquidity here. We take out all of these lows. We take out all of these lows here. All those people that was buying with their stop losses here, wiped out. They're gone. And immediately after that, that's when the market turns around. Always make sure that if you're trying to buy or sell the market, always make sure the manipulation has happened already. If you don't see the manipulation, you probably are the manipulation. We're not looking for sales here no more, guys. Why? This area has already been mitigated twice. Okay, to be honest, I only look for one mitigation. I don't like to take two mitigations off the same area. The first mitigation is usually going to be your best and your most highest probably entry. Okay, so after the first mitigation, if I didn't catch that, I'm not taking a second mitigation. As soon as the market invalidates that area, you immediately, and I mean immediately, start looking for buys. This is where my face lights up and I get happy, because I know whatever buying opportunity I see is going to be high probability, because sellers are gone. Okay, as soon as the market takes out this high, sellers are gone, guys. It's time to buy. All right. So that is when I get confident to start looking for buys. And another reason why is because look at this market, right? We dropped very, very aggressively. So what does that mean? We have a lot of fair value gaps to fill. We have a lot of imbalances, a lot of inefficiencies in these candles to come up here and fill. So when the market is down here, I'm looking for buying setups. So what am I looking for? I'm looking for manipulation of Asian lows. I'm looking for impulsive moves to the upside. Exactly what I showed you guys in the beginning. Manipulation of lows and impulsive moves to the upside. Okay, so when I zoom in, what do we see? We see Asian lows right here. The market opens and immediately goes lower to take out Asian session lows. After we took out these lows, look what happens. Look at this impulsive move. Look at these candles. Let's zoom into here. Immediately, we see a fair value gap. Immediately. For my London session traders, you guys, this is the setup. This is the setup for you, okay? Immediately after rating Asian session lows during London, we create a fair value gap that gives us this impulsive move to the upside, taking out these highs. We took out this high, we took out that high, we took out that high. That's a setup automatically right there, taking your entry off of this fair value gap right here that was created. And look at the market impulsive move to the upside, right? Look at this move all the way towards the upside. Guys, for my London session traders, if you are taking this trade here, right, this is the setup for you. Asian session lows, gets rated, market impulsive move to the upside. We create a break of structure. and you take your entry off of the fair value gap, which is right here. Okay. Stop loss at the low. And now it's up to you what you want to target, right? You can target these highs right here to the left. You can target those highs. I would have already hit TP if I was trading London session. All right, I don't trade London session, I trade New York session. But for my London session traders, I have students that only trade London session. This is what they're trading, right? This is what they're using. They're using these same concepts as we are teaching right here. The trade that I personally took, I'm looking for trades more on the larger time frames. I'm looking for trades more on the 1 hour time frame, but it's the exact same criteria, right? I'm looking for manipulation of Asian lows. Same thing, right? We have the manipulation right here to the downside. That's our manipulation. We can see the market already came and mitigated anything that was in here. When we zoomed in, that was that London session entry that you could have gotten. But look what happens after the market mitigates this area. Impulsive move, right? Look at this candle, guys. This is what you want to see. This is how you know buyers are into this market. Look at this candle towards the upside. It takes money to create that. All right. It takes a lot of money. Follow the money, guys. Follow the impulses. And we left an imbalance. There's your entry. You guys remember that same entry that I showed you here? It was the same criteria. We had a manipulation, we had an impulse, and we had that imbalance inside of this candle. Now it's the same thing. We have our manipulation, we have our impulse that breaks a high, and we have our imbalance right here. That's your entry, right? Entry goes off of the imbalance. Stop loss goes at the low right here underneath this candle, and I'm targeting a 1 to 3, right? So this is a trade that we are currently in on USHF. All right. Trying to take this to the upside. This market is kind of playing around right now. We're already reduced risk. We're not completely break even. We're going to go break even once we get back and we break this high. We'll go completely break even. But right now we're reduced risk. Let's go to forex.com. We're going to a fresh chart here on GJ, and we're going to talk about what we're looking for here and why we were looking for what we were looking for on GJ. Before this market started creating this up move here, what do you guys see? We can see that we were creating all of these highs right here. So I want you to pay attention to this high. Boom. Look at this high right there. This high here is our high that creates our liquidity pool. Why? Because after this high, we had no other highs that went past this high. So that means we are creating equal highs, right? We know this from ICT, the Godfather. We are creating equal highs. We're creating a liquidity pool. What does that mean? This is something that the market wants to target later on, especially, let's zoom into these highs specifically. All right, we can see this high, which is our anchor point that starts our liquidity pool. After this wick, this high right here, look at this next high. It is a lower high. Look at this next high. It is a lower high. Look at this next high here. It is a lower high. The market is building a liquidity pool. Why? Because we have sell orders getting into here. There are money sitting above these highs because none of these highs are getting manipulated. All of these highs here is our liquidity pool. So now when we're looking at this market, what are we looking for? We're looking for buying opportunities to come sweep these highs, right? I don't care if the market continues going past these highs. That's fine. If it does, I will continue buying it. But while the market was stuck in this range right here, I'm looking for buying opportunities at least to take out these highs. I know that's an easy target, okay? So when the market creates our setup, let's go down here to the 1 hour time frame. We're looking for manipulations of Asian lows, impulsive movements to the upside. And you guys can see we weren't looking for those just yet because the market didn't do that, right? Let's zoom into here. We didn't manipulate Asian lows right 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 here. So during this whole time, while this market was playing around, I wasn't looking for any setups. Okay, I was waiting for my A setup to show. And look, this is where we started showing right here. Zoom in. Let's go to the 5-minute time frame. This is where we started showing right here, guys. we start manipulating Asian lows, right? Look at this manipulation of Asian lows. We took out some more liquidity. We took out some more liquidity. Look at the impulse, okay? Market impulse to the upside. After I seen this, I knew it was go time. I knew after this is going to start our train towards the upside to come take out these highs. And I'm going to show you guys that train right here. Let's go to the 5-minute time frame. This happened 3 days in a row. When you see this, guys, it's time to make money. This happened 3 days in a row. Okay, the market manipulated Asian lows. And we impulse to the upside. The market manipulated Asian lows right here. And we impulsed to the upside. The market did it again. We manipulated Asian lows right here. And we impulsed to the upside again. Okay? This happened 3 days in a row, guys. 3 days in a row. That is not a coincidence. Now, here are some of the entries that you could have taken inside of these impulsive movements. So here, the market did not make it back to this imbalance. Unfortunately, we did not make it back into that fair value gap. So there was no entry here. That's where I would have taken my entry kind of deeper into this to fill this fair value gap down here. But the second day where we manipulated Asian lows, you can see we manipulated with all these wicks right here. Look at this impulsive move right here, guys. Look at that impulse towards the upside. Inside of this, we have a clear fair value gap right here. We have this fair value gap right here that the market mitigates, okay? There's your entry. Stop loss could go at the low right here, and there's your first trade off of that. There is that trade, guys. We have the impulsive move to the upside. We leave this fair value gap between these two candles here. The market comes and fills it, and we impulse again towards the upside. Now, inside of the next impulsive movement, we create another entry opportunity inside of here. We created another entry opportunity off of this fair value gap right here. That the market came, we mitigated. Your stop loss could be underneath this low. And that's your next trade. Market impulsively moves towards the upside again, giving you about a 2.84. This is how you follow the money, guys. You wait for the manipulations and you follow the impulsive movements after the manipulations. For example, here we have a manipulation of Asian lows. We have an impulse to the upside. Here is where you want to take your trade inside of this unmitigated imbalance, unmitigated fair value gap. Now, this one still hasn't been mitigated, but you can see the next 2 days, you did get those mitigations, right? We have the same setup again. We have a manipulation here of Asian lows. And then we have our impulses to the upside that creates fair value gaps, that creates imbalances. Those are the entries that you want to take. I hope you guys got some great information. We have a lot more to talk about when it comes to liquidity. So trust me, this is not going to be the only video on this, guys. I have a lot more information to tell you guys about liquidity, fair value gaps, and imbalances. So please stay tuned. We have another part of this liquidity concepts coming, a lot more parts and a lot more examples that I can show you guys and cover for you guys. I appreciate you guys for watching this video. Thank you for those of you who stuck around. Follow me on Instagram, join the Discord, join the live calls when I trade live. I will see you guys in the next one. Peace out.